I'm thinking I'll probably invest more into this company personally, and I'm up 85%. Hi guys, so in today's video, I wanted to go through my top 3 performing investments and essentially take you through them, tell you how much I've invested, what the return is, and then go through and take a look at genuine impact for some analysis to see what the analysis is saying on each of these stocks. Just to note that this is talking about individual stocks only, so we are not including ETFs and we are not including any crypto investments, because of course I do have some really highly performing crypto investments as well. I do want to thank Genuine Impact for sponsoring this video, and if you haven't heard of them, I've mentioned them in a few videos previously. I've done a review video and I've used them previously in stock analysis videos. Obviously, you will see how the app works through this video, and if you are interested in signing up, firstly, they do offer a free version of the app, and secondly, they are currently running a competition to win up to £2,000, and essentially all you have to do to enter is to refer a friend. So for every person that gets referred, they add £5 to the prize pot. It's going to be capped at £2,000. This does close on the 1st of March, so bear that in mind depending on when you're watching this video. But yeah, feel free to use the link down below, sign up and enter the competition. So without further ado, let's get started, and I'm going to start with the 3rd top performing and then move up to the top performing. Interestingly enough, these percentages are a lot lower than they have been previously. Obviously, we're in a downturn at the moment. But my 3rd top performing investment is Enviva. Now, this is also one of my smallest investments. I only have 1 share in this stock. So I'm currently up £19 on Enviva, which is actually a 59.2% increase, which is a fairly decent return. Okay, so straight away we can see how many of these checklist items they are top, neutral and fail for. So actually they're in the top 20% for historical growth and historical return, and then in the bottom 20% for momentum and expected return, and fairly neutral in the middle for the remaining factors. Now, if we look at one of the new features here on the app, we've actually got an interactive price chart, which is really, really helpful. I did think this is one of the things that were missing from the app previously, so I used to have to go into other sort of means to get this. But as you can see, we can now select all, and we can see that overall, from 2016, pretty much, it's gone up about 224%. Now, the other new feature we've got here is the notes function. So you can add notes about the different companies that then show up on your profile so people can see what you think of certain stocks, etc. And obviously you can see what others think as well. So in terms of similar stocks, we've got a few here that seem pretty decent. Like there's one here with quite high momentum, Phillips 66. Seems like quite good value at the moment. It's not one I've heard of, but it's a good feature to check out similar stocks. And the really cool thing that they've added as well is this compare function. So you can actually choose another similar stock to compare to and see what you think. Obviously, I'm not going to do that now because that's not the point of this video. Now, what I'm going to do next is actually filter this on the energy sector, because we don't want to compare it to non-comparable stocks. So if we put on the energy filter, we can see that this checklist changes. We're now top in only 1 section, so historical growth in comparison to other energy stocks. And we're in the bottom 20% for 4 items now. So value, momentum, expected return, and accounting strength. So if we scroll back down to the rankings, so this is now comparing it to those other energy stocks. We can see here in terms of quality, it is rated medium. So quality represents how well the management team runs the company, how strong the balance sheet is, and how much the shareholders benefit. So essentially profitability, financial strength, and capital allocation. So not bad at all. We can see here how that's broken down. So it's actually quite high in terms of profitability. Seems to be quite weak on financial strength, which is interesting. And this is the one thing that I do think that Genuine Impact could still improve on, which is actually giving breakdowns of how this is calculated. And then pretty sound capital allocation. In terms of value, it's currently showing as very expensive at the moment, which is probably why I'm up so much on my investment. Momentum is weak and the ESG rating is medium. So 35 out of 100. And the only thing it scores bad in really is the governance. So dividend strength seems to be sound. They've got a 4.3% dividend yield and a 19.5% dividend growth. Their historical growth is actually very high and the return is medium. Share price stability is medium, liquidity is low, size is big. It's got a 4.6 billion market cap. And then if we go to expected return and expected growth, it seems to be rated low. So accounting strength also seems to be ranked quite poor here on pretty much all of the factors here in accounting strength. Again, it would be nice to see a bit more breakdown here to understand it. Now, they seem to also have missed their revenue and earnings per share targets based on what analysts estimated. And talking of analysts, we've got 5 analysts that have provided ratings here, and 60% of them are saying hold and 40% are saying buy. So no one's saying sell, at least that's a good thing, right? So the majority are saying you should hold it right now, which is pretty much what I'm planning to do. And it looks like the next dividend payment date is February the 25th, which should be any time now for me. So looking forward to that. Okay, so my next best performing stock is AbbVie. So I've got about £450 in AbbVie at the moment, which is about 4.2 shares. And I'm up 63.2% on my investment in AbbVie. So let's have a look at what AbbVie is saying on here. So straight away, I can see that they are scoring top in quite a few things. Top 20% in ESG, dividend strength, historical return, share price stability, liquidity, and size, failing only in the expected return. But if I scroll down and just do the comparison straight away this time, and by that I just mean filter to healthcare. So let's do healthcare here. Let's see how that impacts. Okay, so it's even better when you compare it to healthcare. We've now got 7 things that it's top 20% in. So I think the additional one, it's quality or size? I don't actually remember now. But it seems to fail only in one once again, so only in expected return. If we look at the price chart, overall it's grown 314% since probably early 2014-ish, I would say that chart goes to. And then in the last 1 year, it has grown just under 37%. We've got this feature here as well, which shows you the funds that have this particular stock that you're looking at in their top holdings. So it gives you, for example, names of the funds like this pharmaceutical ETF, etc., iShares innovative healthcare ETF, and all this stuff. So actually, if you're interested in getting into certain companies, but maybe you're not quite comfortable investing into individual stocks, this might be a good way to find the ETFs that hold the stocks you're interested in. Okay, so let's look at the rankings. The quality seems to be very high, with very high profitability, very sound capital allocation, and again, this weak financial strength. I really want to understand what goes into these calculations here. Value is showing as cheap, which is really interesting. Potentially suggests that the ratings are going to show a buy. So income statement very cheap, cash flow very cheap, and balance sheet expensive. Momentum seems really strong, and if we look at momentum, it actually measures the operating strength of a company compared to market expectations. So if the results beat market expectations, then momentum will rise. So actually it seems like they are beating expectations at the moment. The ESG rating is very good, which is what I like to see. And the dividend strength is very sound. So we've got a 3.6% dividend yield and a 21.5% dividend growth. So I did actually invest in AbbVie as part of my dividend strategy. And having a look at all these figures now, I'm thinking I'll probably invest more into this company personally. So historical growth, again, we've got high, and historical return, very high. Very stable share price, a very high liquidity, very big size, medium expected growth, low expected return, and sound accounting strength. They seem to have missed the revenue and EPS from sell-side analyst estimates. However, if you look on here, out of 27 analysts, 81% are currently suggesting that AbbVie is a buy right now. None are saying sell, and 19% are saying hold. So I'm quite right, I think, in my decision that I'll probably invest a bit more into AbbVie currently. Obviously, don't forget, I'm not a financial advisor, so do your own research before making any decisions to invest. Now, if we look at their revenue by region, we can see that actually about 3/4 of their revenue comes from the US, and then the remainder from international and Europe. And their next dividend payment is in May. So quite some time left. But actually, the ex-div date is April the 13th, which means if I invest now, I can have a higher dividend. Okay, so the final stock on this list, and my number one top performing stock overall, is American Express. I have about £218 in American Express, which is about 1.5 shares, and I'm up 85% on this stock, which is actually a lot lower than it was before this whole market crash, but still 85% is such a good return. Let's have a look at Amex on here. We can see top 20% in 5 things, fail in 1. Again, let's just filter it straight away into the financial sector. Okay, so now that we filtered it, we can see it's top 20% in 5 out of the 13 measures, that being momentum, ESG, historical return, liquidity, and size. And then it's bottom 20% in value, historical growth, and expected return. Now, the one thing I will say is I think I'm correct in saying this, that historical growth on here compares to 2 or 3 years ago. So it doesn't take into account overall historical growth. We'll check that as we scroll down, but I'm pretty sure I'm right in saying that. So overall performance, if we go back to the start, we can see it's gone up 217% overall. And then in the last 3 years, it's gone up 80%. Okay, so compared to the other financial stocks, the quality at the moment is ranking low. This being broken down into very high profitability, very weak financial strength, and medium capital allocation. Again, with the financial strength, not really understanding the breakdowns, they all seem to be showing as quite poor on here. So probably something that's worth exploring. In terms of value, it's showing as quite expensive at the moment. So it'll be interesting to see the analyst ratings. Momentum is very strong, so they do seem to be outperforming those expectations. Very good ESG rating, which is what I like to see. Medium dividend strength. So Amex isn't really a dividend stock as such, so you wouldn't really be investing in Amex for the dividends, but it does have a 0.9% dividend yield, so you do get some dividends from them. Okay, so let's have a look at this historical growth. Yeah, so if you can see, we rank the company based on how much they grew between the financial year 2 years ago and the current financial year. So if we think about what's been happening for the last 2 years, this particular measure may not be the best one to focus on. But if we look at historical return, we've got very high share price, volatile, liquidity very high. Again, with the stability, I'm thinking, is it because everything's been up and down for the last 2 years? Size, very big, 148 billion market cap, low expected return and high expected growth. Accounting strength is showing as medium, and interestingly enough, they are the only ones that seem to have beat consistently for the last 3 years their revenue and earnings per share estimates from sell-side analysts. So out of 29 analyst ratings here, we've got quite a divide. We've got 55% are saying to buy now, and then 41% are saying hold, with the remaining 3% saying sell. So I'm not going to be selling mine. I love Amex. I use it both on my personal account and my business account, and I think they're a great company and I do see a lot of potential here. So I'm siding with the buy analysts at the moment. I'm probably going to focus on AbbVie personally, just because they are more of a dividend stock and I'm more of a dividend investor, but still top up Amex as well. Again, more than 3/4 of their revenue seems to come from the US, which is quite interesting because I thought Amex was a worldwide company. And their next dividend payment date is February 10th, which means I think I received the dividend already. I'll have to check that. I tend to do a bit of a roundup at the end of the month. So yeah, those were pretty much my top 3 performing stocks at the moment. I'd love to know what you think of them. Would you buy any of them? Do you hold any of them? And let me know what your top 3 performing stocks are, because I'm really interested to know which stocks are performing best for everyone. And I know it matters on when you purchased it and all of that, but I'm nosy, so let me know. Anyway, hopefully that's been useful. Thank you so much for watching, and I'll see you in the next one. Bye.